Ladies and gentlemen, we had an earnings challenge last week, and as promised, I'm going to go over our results for better or worse. We also have our earnings challenge number 2 this week. How did we perform? Prior results aren't indicative of future performance, but I'm going to share with you for the entire week coming up of August 30th to September 3rd, each one of my earnings picks. There are 9 of them. I have 8 long and 1 short play. You're going to get to be part of them all. In the link in the description of this video, there's a very easy way to follow. You can just literally look in the link in the description and I have them all listed. But I'm going to talk a little about them all very briefly, maybe slightly fundamentally, and we're going to go through them. So I hope you guys enjoy this Newsbeat show. Just want to say, Newsbeat show has been brought to you by T3 Live. T3 Live. And if you're wondering, well, in the high 90s of why people fail and why traders fail, just check out how we do over here in the Newsbeat live room. What you see on top, it's a little hard to see the green numbers, but last one, 86%. We literally track how many people are between the flattish green, very green range versus red or very red when they trade. So we're basically doing a measure of psychological toxicity. The majority of our members are in the green zone. So make sure you check it out. And also, if you like more freebies, do not forget to check out our free ebook. Do not forget to check out our free ebook. There is a link in the description for that. And let's just get to how we did last week, and then I'm going to share with you everything from this week. So the way I judged it, as I have said in my prior video, is very simply. I basically took all the closing price of the stock right before they reported, whether they reported after the bell or before the next morning, and I literally labeled it as if you bought it at the close, sold it at the open, no management, no thinking, enter, exit, very simple. If you were to do that, how would have you performed? And we're going to go through them, and I gave you guys double AP. Gave you guys double AP. This one gapped down 0.56%. I gave you guys Intuit. This one gapped up 3.9%. I gave you guys Dick's Sporting Goods, which was a massive gap up of 14.5%. I gave you guys CRM, which gapped up 3.5%. And I'm taking all the good with the bad. I do have some losers here too. Don't worry. I'm just literally going down the list in order as I shared them with you. Alta Salon, you would have made 5.4% of your money. NTAP, you would have made 6.3% of your money. Box was a loser, even though it came back up. You would have lost negative 4.9% of your money. Dollar General is very bullish on. This one didn't work. You would have lost 6.2% of your money. Flowers.com, even though it opened up and exploded up and went green. Again, if you have your own management system, maybe, but I'm just going by the closing and opening price to keep it fair and simple. You would have lost on Flowers 9.8%. Smucker's Jelly, SJM, you would have lost 3.3%. GPS, which is Gap, you would have made on Gap 3.9%. And there's just 2 more, and then I'm going to share with you all the new ones. Hewlett Packard, you would have lost 4.6%. Inhibit Sports, you would have lost 0.53%. So overall, our record is if you took all these trades and you got in at the closing price and you exited at the opening price, you would have been up 7.6% of your money. Now, some of you might be sitting there and thinking, well, that doesn't sound like a lot. Well, sure, if you had, $10,000, you were up 761 by doing 13 plays. It doesn't sound like a lot, but at the same time, just keep in mind if you took, you know, just looking at my first name, if you took $10,000 worth of AAP, you would have had like 48, 47, 49 shares, whatever the numbers. We're talking very small stock positions. If you had 100,000, if you put 100,000 behind the names in buying power, and again, you're literally just buying them at the close, clearing it out the next morning out of your account. You're not sitting there watching it gyrate, trying to catch some massive maybe move. Even though earnings do have some massive gaps, you would have made $7,610 and anything in between. So it sort of gives you a little idea. It was successful. There are people who literally made their weeks here on these names, and congratulations. And because so many of you liked them, I figured I would do it again for you for absolutely free. So we're going to start off, ladies and gentlemen, just so we're clear. I want to show you how I listed all my names. I'm going to go over all of them fundamentally, but just if you look in the description of this video, I literally panned it out in a very simple way for you. So I literally labeled them 1, 2, 3, 4. So basically, on Monday, if you're following, I can't tell you legally to buy or sell security, but let's say you want to follow the challenge here. Monday, because these are reporting Monday after the close, right before the close on Monday, you'd buy Zoom and NDSN long for earnings. Tuesday before the close, you would buy Crowd, AMBA, and you would short CPB, which is Campbell Soup. Wednesday before the close, you would buy Five Below, FIVE, and you would buy Signet Jewelers, SIG. Thursday before the close, you'd buy DocuSign and AVGO, the old AVGO known as Broadcom. So there's literally 9 names on my list for the entire week. There was 13 last week. There's only 9 this week. And I'm going to go over exactly why I chose these names. Now, a lot of people like to apply technicals. Current technicals, moving average placement, stochastic placement, MACD placement, combinations of both trend lines, which obviously you see on my chart as well. I want to tell you my approach last week was 100% fundamental. I took fundamental analysis. I was looking for the companies to report good numbers, and whether they gapped up or down, that's up to the market. That was my approach. So I'm sticking with that approach. I actually am not using any form of technical analysis to judge these plays for better or worse. Again, I don't know how this is going to go this week, but I figured so many people enjoyed it last week, might as well do it again. So I'm going to start off with Zoom. Ladies and gentlemen, and I'm going to talk a little fundamentally. Fundamentally, I think they're going to crush the numbers across the board. People still use Zoom. Be honest. How many of you are chilling on Microsoft Teams every day? And some of you might say, well, Mark, I have another job outside of trading and I am on Microsoft Teams. The majority of you are using Zoom. It's almost like it's not, I almost feel like it's to the point where it's like, how many of you guys are using Bing as a search engine? And you're probably looking like, Mark, no, I use Google. And I'm like, welcome to 99.9% of society. And that's what it really feels like. And I know some of you might be sitting there in the corner like, I use Bing, Mark. I use Bing. And I'm like, you are the exception to the rule. And I feel that's almost the same thing with Zoom, where people, and I'm not saying better or worse, I could care less what's better or worse. I think the vast majority of people would use Zoom over some of these other chat applications. So fundamentally, I'm very bullish. They're talking about increased variance. Certain schools will be closed. Certain people want to, learn from home, like LFH, learn from home, like you have work from home, like WFH, but now you have LFH, like learn from home, with a lot of these students as, the spread of the new variants continue and certain states have different legislature and different rules and different um, practices. to try to contain the coronavirus. Um, I think they're going through Zoom. I think Zoom is big. Another thing on Zoom, which nobody's talking about, is the fact that they bought Five9. Remember that? Remember when they acquired Five9? So, it's going to be very interesting to see what kind of financial impact that has on it. Granted, they might have a one-time fee. All right, where our dollars on hand aren't as high, or some number takes a hit from that, but we bought out a company. So they acquired Five9, which was FIVN. I guess it still trades. They bought it for $200, 28 cents a share. $14.7 billion deal. The deal hasn't gone through yet, so the stock's trading at $183 as we speak right now, but it's already official. It didn't go through, but it's already official that they signed a definitive agreement for $14.7 billion with Five9. Now, Five9's contact center as a service solution with Zoom's broad communications platform can transform how businesses connect with their customers, building up customer engagement platform of the future. So they Zoom is spreading its wings. It's not just going to be, that one-stop shop for what you might use it for, just talking to somebody for free on the other end, unless you have the pro version where you could talk forever without having to reconnect. Yeah, I know what you're thinking. I'm very bullish on it. Next is sort of, it's not the sexiest name. People, I'm sure very few of you trade it, is Nordson's. And it's funny because on August 24th, they also acquired NDC Technologies for $180 million, all in cash. That's not why I like it. Um, I'm more impressed with their raise in their fiscal year 2020 revenue. They raised it to $7.20 to 7.50 from 6.30 to 6.70. And when you have some of these diversified industrial companies, the only thing I think of is them passing on their costs to the consumer and raising prices. And I think the numbers are going to be hit out of the park, and I can't wait to see it. Next is CrowdStrike chilling at all-time highs. I wouldn't be surprised to see CrowdStrike go right through $300. This is Tuesday after the bell, so Tuesday before the bell. This would be a potential name. I mean, they've already been running this puppy up. They've already been running this puppy up. The stock already exploded up here when it was added to the NASDAQ 100 or the triple Q. So right over here, you see this massive gap up. It's like, oh, did they report already? Because I see this massive gap up here. What happened? They're literally joining the NASDAQ 100 index. So that's a big deal. Another big deal is all the talk about hacking. I mean, you don't hear it anymore because Afghanistan is pretty much dominating the headlines. But I want to remind you of a few prior headlines of all these companies getting hacked and having their information threatened unless they pay millions of dollars in, cryptocurrency in order to get their information back. President Biden and the White House are already talking and already telling companies that they need to secure themselves. When I hear shit talk like that, I'm thinking, I am bullish CrowdStrike. I am bullish FireEye. I am bullish all these companies that are here to defend the attack and hack of information. That's where my brain goes when I hear that headline. Uh, you, you guys, you gotta be careful of getting hacked. And I'm like, well, how much money are you going to pour into CrowdStrike when that happens? Now, granted, that's not going to affect their earnings. I'm sure they haven't received the money yet, but fundamentally, extremely bullish here on CrowdStrike. Next is semiconductor equipment and material company AMBA. I know it sounds like a sort of like an umbrella. AMBA. they had their strongest product portfolio in its history on June 1st, which is the last time they reported. Positive secular forces driving their digital transformation across growing number of industries that they serve. And look, again, I've been very bullish on this market. If you know me, I've been just talking bullish. Everything is by the dip. Some people were watching the Afghanistan news and they're like, shouldn't the market go down? Or, oh no, the market's going to crash now because of the new COVID variant. No, you want to know what's going to make the market crash? When everybody gets back to work and we stop printing trillions of dollars as a result. That's when the market takes a hit, not as we're printing trillions of dollars. Everything is BTFD. It's just you got to time it. We actually had the last timing literally immaculately, perfectly when we called the bottom of the market on the last move. But we obviously don't always do that. Prior results, future performance. All these companies can charge more money. All these companies can charge more money. I almost feel like even though we did well last week, I almost feel like this Dollar General thing didn't work because this company focuses on selling things for a dollar. I'm not saying all their goods, but a lot of their stuff doesn't change in price. But it's actually funny because if you look at a lot of the garbage that's being sold, like Snickers bars and candy bars and things along those lines, what happens is they've been slowly getting smaller. Not a lot of people know that, but a lot of the candy bars are actually, as of, if you look at some of these, like a Snickers bar 3 years ago, weighed more than a Snickers bar you would buy in the store today, considering it's a new bar, not a 3-year-old Snickers bar. So I almost feel like that's what tagged Dollar General. I know I'm highlighting one of them that I lost on here, but it's you gotta you gotta almost like change your name to like the $2 General in this environment, if you feel me. Do you want to fight psychological toxicity? Link in the description of this video. Free how to overcome psychological toxicity in your trading. All right, right back to the earnings plays. We're going to move on to Campbell Soup. And this is a company, look, it's been getting slammed. All right, it's been getting slammed. Here's the problem with Campbell Soup. A, it's not good. Your soup sucks. Yes, when I lived in the ghetto and, you know, I was living on food stamps, when I was a kid, yeah, Campbell Soup would be the soup we ate for sure. I would take one of their tomato soups and I'd open up a can of their tomato soups, a can of sweet corn, and I would put the corn in the tomato soup. I know that sounds a little weird. Has anybody ever done that before? Or is it me? Is it just like a ghetto delicacy type thing? That's what I used to do. It was delicious. Anyway, moving on. But all kidding aside, their soup sucks. Well, I wasn't kidding, but all kidding aside, their soup sucks. And on June 9th over here, you see they gap down. That was on their last earnings. They cut their adjusted earnings per share 290 to 293 from 303 to 311. I just feel like soup is one of those things. If people are in a tough environment, I think they're more likely to just make their own soup. I mean, again, like I know all the ghetto secrets. All the ghetto secrets, you go inside a McDonald's or Burger King, you ask for a cup of boiling hot water. You take a few ketchup packets, you mix it in the hot water. You take the salt, you mix it in. You take the pepper, you mix it in. You have tomato soup. Listen, like those are not to bring up the ghetto roots in me, but you know, if you're looking to save money, like I know what a hot water tomato soup from McDonald's tastes like. Let's put it that way. Not proud of it, but when you have no money to eat, I don't think people are going for Campbell soup. And food is a very big thing right now. Food is a very big thing. They've been missing on their earnings. They announced up to a $250 million share repurchase program. They're trying to save the stock price. Maybe they gap this up. I don't know. This is the only name I'm bearish on. So if you actually go ahead and you look at my list, you're going to see that there's just one short play, and that's going to be Campbell Soup. That's going to be Campbell Soup. And the cute thing about this list, you're never going to be in more than 3 overnights. So Monday, right before the close, you'll be in 2. Tuesday, right before the close, you'll be in 3. Wednesday, right before the close, you'll be in 2. And Thursday, right before the close, you'll be in 2, considering you want to accept this challenge and follow this list. So yeah, going back to Campbell's, honestly, it sounds a little nuts, but if I put myself back in that yes, I've come a long way. If I put myself back in that mentality where I had food stamps, I wouldn't be buying Campbell soup. I wouldn't. I'm like, huh? Why would I do that when I can literally spend $5, $6 and create a huge tub of chicken soup? Why would I pay $2 for a can of cream of mushroom? I just wouldn't do it. I mean, if I'm at the point where I want to save money, I'm not going for Campbell's soup. If I'm at the point where I have money, I'm never buying Campbell's soup. You feel me? So I don't even, it's honestly, I just think it's a dead brand. So we'll see. Maybe I'm wrong. Next is one of my favorite stores because if I was a kid and there was a Five Below near me, I'll tell you, my eyes would light up like a pinball machine. I walk in there, they have this row of candy which you need to take a solid 30 seconds to walk just so you could get past it. I mean, in bulk sizes and everything, I would have dropped a bomb in my pants if I was a kid and Five Below existed. Stock has been in an absolute tear, hit all-time highs at 237.86 on Wednesday. Beautiful, beautiful pulling over the last couple days last week on Thursday and Friday. Um, they they just crush revenues every time. They last reported on June 3rd, right over here, and they literally gapped up a little less than 13 and a half points right here. Doesn't look like much, but 13 and a half point gap up. They announced 88 cents a share back then. That beat the 65. The consensus this time is 71 cents. Analysts are projecting that Five Below are going to, try to do 71 cents a share. Nonsense. I do not see them reporting less than $1. Nonsense. Analysts expect 584 million. I'm expecting 650. How's that? Analysts are going to be wrong. Now, does it gap up if I'm right or wrong? Market could go down or up for any reason. This is going to be one of the names on my long list. The next name, I'm a little embarrassed to say that I'm bullish on. I'm a bit embarrassed, but I'm going to get over it. It's Signet Jewelers, and doesn't Warren Buffett own some of this, or was that K Jewelers? Anyways, they last reported on June 10th. Right over here, you could see the stock got just a really nice $5.50 gap up right over there. They announced $2.23 a share that decimated the $1.27. 1.69 billion beats the 1.62 billion in revenue. That was from obviously last quarter. I don't know what they're going to report this time, but I think they're going to crush and raise across the board. I think, you know what Signet Jewelers is? It's one of those shopping mall jewelry stores. And even though I'm guilty of buying things from a shopping mall jewelry store, you have to be in high school, phenomenally horny with your girlfriend to actually shop at like a Signet Jewelers. Because in all fairness, like it's a bad deal. and it's serious. It's not like you're spending, let me explain it to you. It's not like you're buying a 16-ounce Coca-Cola from a machine and it costs $2.50 or something stupid and you're thirsty and you're like, screw it, I'm going to buy it anyway. I mean, you're talking jewelry here. You're talking jewelry. You could spend $10,000 in a Signet jeweler like that, 20 like that, 30 like that. So you're not dealing with small money where you want the convenience. If you need to go to a jewelry store and the location of the jewelry store is your deciding factor, let me tell you, my wife wanted to go to a local jeweler. I was going to buy her a bracelet, but my wife and this was whatever back. My wife wanted to see the bracelet in person. It still pisses me off to this day that I gave that local store money. It's not like support your local store. I don't give a shit. All these jewelry stores are online. I don't give a shit. It's not like a mom and pop jewelry store. Like, look, you're selling 50, 60, $70,000 items. You're not a mom and pop shop. And you are lined up with millions of dollars in inventory. So chill with the mom and pop talk for a moment. These prices are so inflated that Jerome Powell blushes when he sees them. That's how inflated they are. He sees that and he's like, "Oh my God, I thought I was shit. I thought I was printing a lot of paper." I'm telling you, go to any mall jewelry store. Take any diamond ring. Let's say you want let's say you want to spend $10,000, just making a number up, on a diamond ring, right? $10,000. You walk into that jewelry store, they're going to show you like, oh, it's like point 0.8. They're going to show you a color and clarity in between the DEF range, which is the top range. They're going to show you that. It's going to have some inclusions in it. If you, I don't know how much you guys know about jewelry, but it's going to be nice quality, but you're going to pay three, not 20, 30% more, 300% more than you would if you went to the online on eBay or the Diamond District from trusted eBay people, not just some shady seller like a jewelry company on eBay that sells. Yeah, I run a joke every time. Like, why did you break up with your boyfriend? It's like he went to Jared's. Oh, that schmuck. Doesn't he know that he could go? Yeah, I know. That's why I broke up with him. Like, every kiss begins with K. I could imagine like a girl going to kiss a guy because he gave her something from K. Like, oh, this is so pretty. Where did you buy it? And it's like K Jewelers. Like, whoa, I didn't know you were bad with money. Back off, son. Take this shit back and return it. Baby, I can't. Get out of my house. Like, that's not gonna end well. Like, do not tell your girl that you went to K or Jared's. That's such a cop out. That is such a cop out. However, well, why are you bullish on it, Mark? Because people are still getting stimmy checks and people are stupid and people are going to buy shit at a Signet Jewelers, in my opinion. People are going to go to a mall, they're going to buy shit from a Signet Jewelers. As dumb as it is. And this stock has, in all fairness, has been running up. Hope it pulls back a little before Wednesday, before the close. But I'm telling you, there are people. If you do want to buy something for your, if you do want to buy something for your special someone, usually men are the one who shops. So, um, if you're a woman and you're buying something for a man or whatever, whoever you are, look, find out how much money you want to spend. Go on eBay. I recently bought my wife a bracelet like months and months and months ago. And I bought it from a store. And I'm sitting there and I'm trying to explain to my wife. And I'm like, sweetheart, for that same money, I could get you 3 times the weight in those diamonds with the same quality. 3 times the weight. Three. Three. Maybe you don't want that shit hanging on your wrist so heavy. I'll spend 30% less and get you 100% more. I mean, she was adamant on going. I don't, is it a woman thing? They just want to try it on. They want it from the store and they want to see it themselves before they get it. I'm like, sweet, I'll return. No, maybe I don't like the clasp. I literally bought it from the store. To this day, she loves it. She loves the bracelet and everything. She's happy, and I'm just like, whatever. What an effing waste of money that I did it. What an effing waste of money. And I'm like, I'm just, I'm dumb. I drove by the store today, and it reminded me that I bought something from there. And I'm like, I felt so, like, literally, I lost like 300,000 brain cells just by driving by. I'm like, I became like a little more, like my IQ dropped like point 0.2 of one, like point 0.2, 0.2. My IQ dropped permanently by driving by that store. I'm like, oh God, I can't believe I'm so dumb. Oh my God, I'm actually dumber. Nonetheless, I think Signet's going to crush it. I think they're going to kill it, and I'm bullish on the name. We're going to move on. I got a little tell me how you really feel about buying mall jewelry, Mark. I didn't buy it from a Signet. I bought it from like a jewelry store in the middle of like a little. Don't make me relive the memory. I lost enough brain cells and dollars doing something stupid. Please don't remind me. DocuSign, DOCU. Um, very, very big mover. All-time high was made on August 10th at 314.76. I think this company is going to be, I don't think they're going to crush it. I think they're going to do a nice little beat on earnings. We'll see what happens with the name. I'm very bullish on DocuSign. It's an amazing software. It allows people to record their signature and then just click in signatures. It makes filling out documents electronically very easy. It's probably the best service out there for it. I'm very bullish on DocuSign. Last but not least, Broadcom, the old AVGO company used to actually be called AVGO. That's why the symbol's AVGO. And then they renamed themselves back to Broadcom. So on July 12th, they're acquiring SAS Institute for 15 to 20 billion coming out of the Wall Street Journal, and the stock plunged that day. They announced it on July 12th, and the stock plunged and popped, and it was very volatile, and then it fell afterwards, came back up, fell, and now it's coming up again for earnings. So a lot of these companies that I'm talking about had recent acquisitions. Zoom had a recent acquisition. What was it? Ambarella or Nordson? One of them. Signet would never have an acquisition because they're not stupid enough to pay that much for a jewelry company. They're just smart enough to sell it to you for that much. Okay, enough with the Signet Jewelers. Moving on, just again with the AVGO, I think they are going to beat across the board. I think you'll have a decent beat, nothing big here, but enough where I'm going to take a risk with it. I think they're going to beat in revenue maybe by 150 million or so through consensus is my guess. That's all it is. And I'm very bullish in it. I think I don't see any reason why we don't pop $500 in the name. And again, very expensive stock. And again, if you have $10,000 worth, you might have, 20, 21 shares type thing. So, again, you're not talking like big share size. If you have $100,000, you have, 200 shares, which is a bit larger. But if I had a prop account and T3 offers prop account and I had the buying power in my prop account, I'd be doing this shit every day on earnings all day because I'd want to use the buying power. If you're interested in T3 prop trading, info at t3live.com. Make sure you email today. So that's my list. Those are my list of names. Again, the prior one gave you a 7.61% return, which is nice. It's nice. It's real money. And again, doesn't mean these will work, but you guys had a demand for it. So here are my earning stock picks for next week, August 30th to September 3rd. If you're joining us here late, again, I labeled them as numbers. So Monday before the, since these are reporting Monday after the close, you got to be in Monday before the close if you're following my mentality here, of course. So Monday before the close, you buy Zoom and Nordson. And again, I can't legally tell you to buy. I'm just sharing the mentality. Tuesday after the close, you buy Crowd, AMBA, you short CPB. So you buy Crowd, you buy AMBA, you short CPB. There'll be 3 positions. You exit them the next day in the open. Wednesday after the close, you buy Wednesday before the close, you buy 5 and you buy SIG. So I literally bundle them up for like every number of what you're doing, so it'll be easier for you guys to understand. And again, in the description of this video, you could find this, or you could just hit print screen or screenshot your phone right now if you want these names. And Thursday, right before the close, you buy DOCU and AVGO and sell it on Friday morning at the open. So those are my list of names. Those are what I am watching. Again, if you're interested in everything we do here, again, we produce some phenomenal consistency ratios that are unseen and unheard of anywhere in the industry with what we do. Everything is not for everyone. I might not be for everyone, but I can say from what I can see that I am definitely for the majority of people here who join this service, and that is something big to say. So, from the bottom of my heart, I just want to thank you guys for all the love. I know I've been extremely ill, sicker than I've ever been in my entire life. And I just want to express gratitude for all those who reached out to me, giving me good wishes. I don't always respond to everyone, but I know every single person who messaged me. I know every single person who types to me. I know who you are. And I really appreciate all the love. It really means a lot to me. And I'm phenomenally grateful and blessed that I have people who think of me in that sort of way. And I'll never forget that. So this is sort of my treat for you guys, share with you guys my earnings name, because you've been giving me so much love. And I hope these earnings plays work just as well, if not better than last week. Cross my fingers, anything can happen, right? Happy trading, make money. We'll see you guys next time on the Newsbeat live trading broadcast. Have a wonderful